Hello, what's up? Welcome to another video. In today's video, I'm going to demystify to you candle principle, candle secrets like never before. Like this is a secret that most pro traders they are hiding from beginner traders. So if you're a beginner trader, medium trader, or you've not gotten this secret before, get your book, your pen, and be ready to learn something new. Okay. So the first thing you need to understand about candlestick is that candles are made up of high and low. Candles are made up of what? High and low. And whatever that transpired in between that session, in between that time, that candle time frame is the result. Do you understand? Is the result. Okay, the first thing you need to understand is that candle is made up of what? High and what? Low. This is Candle is made up of what? High and low. Candle is made up of high and low points, right? Okay, so this is basically the low of this candle. This is the low of this candle, and this is the high. This is the high of this candle. So that's the first thing you need to understand. So for this is what? The high, and this is what? The low. That's the low, and that is the high. So that's the first thing you need to understand about a candlestick. And the next thing you need to understand, very important, very important, is what is the opening and the closing what? Price. Opening and the what? Closing price. Opening and the closing price. Okay, so opening and the closing price is the next thing you need to understand. So this is the opening price and this is the closing price, right? That's the opening price and that's the closing price, and this is what? The opening price and this is the closing price. Okay, so when the opening price, the closing price is lower than the opening price, it forms what? A bearish candle. It simply tells you that the market is coming towards the downward direction. That means you are having a downward pressure. Do you understand? And when the closing price is higher than the opening price, it gives you what? A bullish candle. It gives you a bullish candle. So this is the candle of reference, and this is the candle of reference to what we are talking about, right? Okay, so when the closing price is lower than the opening price, it forms what? A bearish candle. And when the closing price is higher than the opening price, it forms what? A bullish candle. Please take note of that. Take note of that. Okay, so the next thing we are going to look at right now is um next we are going to look at right now is candle shift theory. Candle shift theory. So basically, what is a candle shift theory? Okay, a candle shift theory is the principle that let us to know what the next candle is relative to a particular candle. Not just the candle that we are talking about right now, not just the candle we are talking about just right now, not just a particular candle, but in reference, in relative to what? Another candle, right? Relative to another candle. This can be the immediate candle, or this can be like 4-5 candles before, right? Okay, 4-5 candle before. That's what we are going to look at now. Okay, so for example, if you are to look at this candle relative to what? This candle, it is what? A bullish candle. It is what? A bullish candle. Why is it a bullish candle? It's a bullish candle because this candle closed above the high of what? This particular candle. Do you understand? This candle right here, this candle closed above the high. This is the high, right? The high of this previous candle. So that tells you that this candle is what? A bullish candle. So what we have there is basically a bullish candle shift, right? Okay. The next thing we're going to look at is a bearish candle shift. Is a bearish what? Candle shift. A bearish candle shift is the next thing we are going to look at. Okay. So this candle right here, okay, the bearish candle shift is what we are going to look at right now. Okay. So now from here you can see that this candle right here, the low of this candle, right? this candle close below the low, below this low. So this tells us that we are having what? A bearish shift, a bearish shift, a bearish shift. Okay, so now the next question we are going to ask ourselves is, what if the candle didn't break above the high or the low? What if the candle didn't break above the high or the low of the candle that we are anticipating? What if the candle didn't break above the high or the low? It simply tells us that the market is actually doing what? Ranging. What do I mean by break? And when I talk about break, I mean closing above the high, right? It simply tells us that we are having what? A ranging market. For example, this is the high and this is the low, right? You see that this candle and this candle and that candle, these two candles actually were ranging. They formed what? A range. They formed what? A range. A range. So we can't say that this candle created what? um a bullish candle shift. The market didn't create a bullish candle shift, but rather we can only see that as what? A ranging market. You can only see this to be what? A ranging market. Do you understand? You can only see that to be a ranging market, a ranging market, until the market close either above a particular candle or below a particular candle. That's when we can know that, okay, this is the next direction of what? Of the market. This is the next direction of the market. Okay, so now let me explain further. Another thing you need to understand, that the high or the low is always transferred to the next candle. The high or the low is always transferred what? To the next candle. Okay, for example, this was our previous high. This high was transferred here and this high was transferred here. So if you are looking at the next high, right, and if you are looking at the low, it's right here. Do you understand? Because this low is the lowest amongst these three. Amongst these three, this is the lowest. Then amongst these three, you can see that this is what? The highest, right? Okay, so when the market breaks below our lowest price, it tells us that we are having what? What? A bearish market shift, right? A bearish market shift right here. And if the market breaks above our highest point of reference, it tells us that we are having what? A bullish market shift. We're having what? A bullish market shift. That's a very easy, simple principle that you must always put at the back of your mind, right? Okay, so let's further mark up our charts to understand what I'm saying. Okay, for example, we are having this, right? This is the high, all right? This is our low, right? This is our low. Why is it our low? Because this low was transferred. We're looking at this candle and this candle and then this candle, right? So this is a low, right? And here, that is a high. Do you understand? This is a high that the market created, right? And this high that the market created, the low is what? Here, right? Market broke out, created a higher high, but not a closure. Take note, a higher high. And then the market did what? Came back to our low. So what this market is doing right here is just this and what? This, right? So the market is down towards our range again. So this is our high and what? And this is our low, right? This is our high of the range. If we're having our range, this is our high and what? This is our low. So we're waiting for the market to either close below the low or close above the high for us to get a clear direction of where the market is going. So right here, you can see that the market closed above the high of our range. It simply tells us that we're having what? A bullish market shift. You can see that the market went upward after the closure of that. So this is a crucial secret that most pro traders, they're hiding from you. So if you don't understand this video, watch this video over and over again and drop your comment to the question that you have. And don't forget, I have what? A Telegram group and a WhatsApp group where I send free signal and informations like this. So if you're interested in such information, you can do well to join the group using the link below.